Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Tuesday, September 20th. Stocks on Wall Street may get back on track today after snapping a 5-session winning streak yesterday. Those losses came amid renewed fears about the possibility of a Greek debt default. But today, investor sentiment around the world is shifting back towards optimism. That follows a, quote, productive and substantive discussion between Greek officials and the European Commission, International Monetary Fund, and European Central Bank. Several media outlets reported that the so-called troika of official creditors are close to a deal to release the next round of aid to Greece. Another conference call is scheduled for today.
The markets across Europe are largely focusing on that news and shrugging off a downgrade of Italian sovereign debt. Standard & Poor's cut Italy's long and short-term credit ratings by one notch and shifted its outlook to negative, meaning further downgrades are possible. S&P cited Italy's weak economic outlook and political gridlock in explaining its decision. The move pushed the yield on 10-year Italian government bonds up above 5.6%, and the premium that investors demand to hold those notes over German bonds widened. That indicates that despite the gains in the equity markets today, investors are concerned that the sovereign debt crisis could engulf the Eurozone's third largest economy. An Italian default would outstrip the EU's rescue resources and put the future of the euro currency into doubt.
At the moment, the euro is gaining ground against most of its major rivals, as investors put aside their worries over Italy and instead focus on the likelihood of a deal on Greece. Meanwhile, the yields on U.S. Treasuries are holding steady near record lows, as traders look toward Washington and the Federal Reserve. Policymakers are beginning a 2-day meeting today, and Fed watchers are expecting the central bank to take another stab at stimulating the economy. The market is pricing in some form of a plan first tried in the 1960s, called Operation Twist. It attempts to twist the yield curve by selling debt maturing in 3 years or less and buying mostly 7- and 10-year notes. In theory, that would lower longer-term rates, helping mortgage lenders refinance and reducing the costs of borrowing. The Fed will announce its decision at 2:15 p.m. Eastern Time tomorrow.
Turning to corporate news, the biggest name on this morning's earnings calendar is ConAgra Foods. It reported a 42% drop in quarterly profit, as increased sales couldn't fully offset a 15% jump in the cost of goods. The maker of Healthy Choice meals, Slim Jims, and Reddi-wip expects margins to be squeezed even more going forward. It's now forecasting inflation of 9 to 10% for the full year, up from its original estimate of 7 to 8%. ConAgra also dropped its takeover bid for Corp Holdings, after that company repeatedly refused to come to the negotiating table. Corp is planning on spinning off its post-food cereal business into a separate company. After the closing bell, we'll get quarterly results from Oracle and Adobe Systems, among others. That's the latest from Weiss Research. We'll be back after the opening bell with the results of this morning's report on housing starts and all the market reaction.